Good morning. Paul Georgie from Allendale. It's August 17th, and it's Friday morning, and we've got grain markets quiet here in the overnight session. Corn down a little, beans up a little, and wheat is also stronger here overnight. The weather forecast is cool with bouts of moisture coming across the Midwest here for as much as 10 days out. There is talk of some frost up in the Canadian prairie here with this high pressure system that we've got moving through the Corn Belt in the Midwest here for the next several days, but nothing here in the U.S. The weather forecast is not necessarily bearish. It's just that it's not providing any bullish fuel for this market to continue to be supported, and that's why we're seeing some consolidation, I think, in the grain markets as much as anything. The news in the world markets this weekend, we'll get probably more confirmation that the economy in China is slowing down as the property price data will be released in China here over the weekend. So that could have an impact on Sunday night's opening. So something to watch for there. Other news, the White House is toying with the idea of opening up the oil reserve in order to try to pressure gas prices here. Seems to us that that is more a political move than anything as we move closer to the presidential elections. For those of you that haven't read the wake-up call that I wrote here this morning, I would ask that you do, because we talked a bit about the insurance program that producers have, and we're hearing a lot of talk that, well, the farmers are protected with crop insurance and everybody will be fine. Well, certainly some stories coming out that that is not the case. Did some work looking at the RMA website last night and found that only about 65% of the planted acres of corn are covered with the revenue protection plan. And out of those 65%, there's only about, well, let's just say there's more than half that have got 75% coverage or less. So when you do the math, there's some risk out there in the for these producers that have lost their crops and lost complete crops. I mean, we're hearing stories of producers already telling their landlords they're not going to get paid rent this year, which that's not going to go over very well. And other producers that have no insurance and considerable losses that are already toying with the idea of filing bankruptcy. So this drought is real. It's definitely a concern and will be have some long-lasting effects on the agricultural community. And those are things that we got to watch as we move forward here. In the meat trade, box beef was up 96, select up $1.16. Pork cutout values were down 88. The big news today is the cattle on feed report that we got coming out at 2 o'clock this afternoon. Trade estimates there for cattle on feed to be 100.7, placed at 91.7, and marketed at 100.7. The key number in that report the traders are watching is this placement number, looking at an average of about 8% below a year ago. However, we've seen this drought move west during the month of July, which dried pastures up, and there could be a surprise coming on that number as well, as the placement number may be higher than what is expected, simply because of these dry pastures, and the cattle ranchers have got to go somewhere with the cattle, and the only place they can get feed is in the feedlot. So a lot of things happening here today. However, this morning we expect markets to start out quiet. Look for headline changes to impact this market, and a lot of reasons to stay in touch with the Allendale Advisory Report. You can check us out on the web, or just give us a call here at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you Monday morning. Thank you.